The average person spends 45 years working only to retire with barely enough savings to last a decade. But what if there was a way to break free from this cycle and achieve financial independence in a fraction of that time? The answer lies in understanding and harnessing the power of Bitcoin. Hey everyone, welcome back to Bitcoin Basics. In the next few minutes, you'll discover a 5-step roadmap that has the potential to revolutionize your financial future. This isn't about get-rich-quick schemes or risky gambles. It's about strategic moves that leverage Bitcoin's unique properties to build lasting wealth and true financial freedom. Are you ready to learn how you can take control of your economic future? Bad debt is the formidable barrier to financial independence. It silently erodes our ability to build wealth and invest in our future. The average American household grapples with approximately $8,000 in credit card debt alone, a financial burden that impacts every aspect of our lives and inhibits our capacity to invest in assets like Bitcoin. The consequences of debt extend far beyond our bank accounts. Nearly 60% of Americans report feeling stressed about their financial obligations, leading to poor decision-making and creating a vicious cycle. This emotional and cognitive toll makes it even more challenging to make sound financial choices, further impeding our path to financial growth. However, there is a way forward. By minimizing debts, we create a solid foundation for financial growth and Bitcoin investment. Effective debt reduction strategies improve financial confidence and decision-making, freeing up resources that can be redirected towards investments with significant growth potential like Bitcoin. The benefits of debt reduction are multifaceted. Experts suggest that reducing debt not only improves financial health, but also enhances overall well-being. This holistic improvement makes individuals more likely to engage in long-term investment strategies, such as consistent Bitcoin accumulation. Real-world examples illustrate the power of debt reduction. People who successfully paid off high-interest debts were able to redirect their funds toward Bitcoin investments, resulting in significant wealth accumulation over time. By breaking free from financial constraints, these people amplified Bitcoin's wealth-building potential, accelerating their journey to financial stability. As we establish this foundation of financial stability, we open the door to a world of possibilities. With debts minimized, we're now positioned to explore the next crucial step on our journey, the power of consistent Bitcoin accumulation through dollar-cost averaging. With a solid financial foundation in place, it's time to supercharge your wealth-building potential. The key to unlocking Bitcoin's immense growth lies in embracing a counterintuitive approach that transforms market unpredictability into your greatest asset. Enter dollar-cost averaging, DCA, a strategy that harnesses Bitcoin's notorious volatility to your advantage. DCA involves investing a fixed amount of money into Bitcoin at regular intervals, regardless of its price. This method transforms Bitcoin's price fluctuations from a source of anxiety into a powerful wealth-building tool. DCA stands in stark contrast to lump sum investing. While the latter might seem tempting, especially during bull markets, it exposes investors to significant timing risks. One ill-timed purchase could lead to substantial losses or missed opportunities. DCA, however, spreads out your investment over time, reducing the impact of short-term price swings and potentially leading to better average purchase prices. The power of DCA becomes evident when we examine Bitcoin's historical performance. Consider this. If you had set up a dollar-cost averaging plan in 2019 to invest $500 into Bitcoin every month and let it run for the past 5 years, you'd have 1.44 Bitcoin today. That's right, you'd have turned $30,000 of your own money into $96,000 for a gain of 220%. This incredible growth is a product of small and consistent entries into Bitcoin, both when the price is up and when it's down. DCA offers more than just potential returns, it builds confidence and understanding. By starting with small, manageable investments and gradually increasing contributions, investors can effectively accumulate wealth over time. This approach is particularly effective during Bitcoin's 4-year market cycles, where periods of rapid growth are often followed by corrections. DCA allows you to capitalize on lower prices during downturns, effectively reducing your average cost per Bitcoin over time. While DCA offers a powerful method for building Bitcoin wealth, Accumulating Bitcoin is only part of the equation. To truly secure your financial future, you must protect your digital assets. Stay tuned until the final step in this video to discover how you can gain access to your Bitcoin value without having to sell a single Satoshi. You've worked hard to build your Bitcoin wealth through disciplined dollar-cost averaging. Now it's time to fortify your digital fortress with hardware wallets, the unsung heroes transforming financial security in the digital age. As your Bitcoin holdings grow, so does the importance of protecting them. The stark reality is that in 2022 alone, hackers stole a staggering $3.2 billion worth of cryptocurrency from exchanges, underscoring the critical need for secure storage solutions. Hardware wallets offer a revolutionary approach to Bitcoin security. These physical devices store your private keys offline, creating an impenetrable barrier against online threats. Leading brands like the Cold Card has become synonymous with Bitcoin security, offering the world's most trusted and secure Bitcoin signing device, aka Bitcoin hardware wallet. Check out the link in the description to the CoinKite store to secure your Bitcoin wealth. The principle behind hardware wallets is elegantly simple. By isolating your private keys from internet-connected devices, you eliminate the risk of remote hacking attempts. This offline storage method, combined with additional features like PIN protection and recovery seed phrases, provides unparalleled protection for your digital assets. Hardware wallets embody the essence of Bitcoin's promise of financial sovereignty. By using one, you're taking full ownership of your Bitcoin, becoming your own bank with complete control over your digital wealth. This shift from custodial to non-custodial storage aligns perfectly with Bitcoin's ethos of decentralization and individual empowerment. The peace of mind that comes with using a hardware wallet is invaluable. Knowing your Bitcoin is safe even if your computer is compromised or an exchange is hacked allows you to focus on your long-term investment strategy without constant worry of potential theft or loss. As we secure our Bitcoin holdings with hardware wallets, we lay the groundwork for the next phase of our journey towards financial freedom. Stay tuned until the final step of this video where I'll reveal the secret of living off your Bitcoin wealth like a true sovereign individual. With that, I'd like to take a moment to thank the sponsor for this video. Caleb & Brown is the world-class Bitcoin brokerage who can help you get into the game to buy and sell Bitcoin in a safe way. Caleb & Brown brings you personalized 24/7 brokerage services, guiding you through every step of your Bitcoin journey. Whether you're buying for the first time or expanding your portfolio, Caleb & Brown's dedicated brokerage team offer you unparalleled support and expertise. Enjoy peace of mind with their secure cold storage and unlimited access to your personalized broker. Click the link in the description to get started today. Leveraged Bitcoin acquisition is a strategy that's reshaping the financial landscape, with companies like Microstrategy leading the charge. This approach involves borrowing US dollars at low interest rates to purchase Bitcoin, effectively arbitraging the traditional financial system both against Bitcoin's scarcity and historical returns. Microstrategy has transformed its business model to focus on Bitcoin accumulation, borrowing at rates as low as 0.8% to 1.76%. This strategy has yielded remarkable results, with the company achieving a return of 1,339% since its implementation in 2020. By leveraging the disparity between loan costs and Bitcoin's average annual returns of around 55%, MicroStrategy has built a substantial Bitcoin position of over 250,000 Bitcoin, which represents over 1% of the total supply. However, this approach is not without risks. The volatility of Bitcoin markets could potentially put pressure on loan repayments during short-term price fluctuations. MicroStrategy mitigates the risk by ensuring they generate sufficient cash flow to cover their debt obligations, maintaining a balance between aggressive growth and financial stability. The mechanics of this strategy can be viewed as a speculative attack on the US dollar. By borrowing in a currency expected to depreciate over time, US dollars, and investing in an asset with strong appreciation potential, Bitcoin, MicroStrategy positions itself to benefit from both ends of the equation. For individual investors, the implications of this strategy are significant. While the scale may differ, the principles remain applicable. By leveraging low-interest debt to acquire Bitcoin, people can potentially accelerate their path to financial independence. This approach allows for the accumulation of a larger Bitcoin position than would be possible through cash purchases alone, amplifying the potential for future gains. Imagine a future where your Bitcoin isn't just a dormant investment, but an active participant in your financial life. What if you could tap into its value without triggering a taxable event? The next frontier in Bitcoin utilization is here, and it's poised to revolutionize how we think about liquidity and wealth preservation. Borrowing against Bitcoin holdings for everyday expenses is a game-changing strategy that allows you to access the value of your digital assets without selling them. This approach stands in stark contrast to traditional methods of accessing Bitcoin value, which typically involve selling and potentially incurring significant capital gains taxes. By using Bitcoin as collateral for loans, you can maintain ownership of your assets while still benefiting from their value. This strategy is particularly appealing in the context of Bitcoin's historical growth trajectory. As your Bitcoin appreciates over time, you can access larger loans without diluting your holdings. The tax implications of this approach are substantial. Selling Bitcoin triggers capital gains taxes on any profits, which can significantly reduce your overall returns. In contrast, borrowing against your Bitcoin doesn't create a taxable event, allowing you to preserve more of your wealth for future growth. Bitcoin-backed loan platforms have emerged to facilitate this new financial paradigm. These platforms typically offer loans at a certain loan-to-value ratio of your Bitcoin holdings, depending on factors such as creditworthiness and market conditions. This flexibility allows you to tailor your borrowing to your specific needs while maintaining a significant stake in Bitcoin's potential future appreciation. Experts in the field suggest that leveraging Bitcoin for loans can be a sustainable model for long-term wealth management. By utilizing your assets without liquidating them, you preserve your investment for future growth while still enjoying its benefits in your daily life. This strategy effectively allows Bitcoin to serve as both a store of value and a source of liquidity. Imagine a world where your Bitcoin holdings not only appreciate in value, but also provide you with the means to fund significant purchases, invest in new opportunities, or simply cover everyday expenses, all without ever having to sell a single Satoshi. The journey to financial sovereignty through Bitcoin is now clear. By implementing these strategies, minimizing debts, consistent accumulation, secure storage, strategic borrowing, and utilizing Bitcoin-backed loans, you're forging a path to reshape your financial future. As Mark Moss emphasizes, the true game of money involves converting fiat currency into assets, not the reverse. This fundamental shift in perspective is essential for achieving genuine financial freedom. Thanks for watching. Click the link on screen to watch the next video from Bitcoin Basics.